The broadcast is now starting. All attendees are in listen-only mode.
Low face warriors who's ready to have a good week. Not earn or learn. How about earn and learn? A and B, all of the above. Okay, so it's spring this week, guys. First week of spring. So at equinoxes and solstices, Gann felt that there were potential reversals that just like the seasons change, market direction could change. So I believe it's this Wednesday. Interesting, right on the Fed meeting. I could throw in a full moon too if you want something astronomic. So, spring is something that every year we have a chance to start new and fresh and new birth, new growth, and the snow melts away and you start to see more green. So, green's a great color, right? Color of our currency. So let's make this spring one of the best trading seasons you've had in your career. And let me provide a few ideas that I think are going to happen, what potential reversal candidates into this spring equinox. Uh, First of all, yen. Yen had a pretty negative day, faded it on BOJ, trying to hold this 1140, 1150 area. Maybe we're going to get some type of ABC, but it measures down here once we start closing back under 40 or so. And then it measures basically once we take out 110.80, just arithmetically 140 pips under 110.80 will give you 109.40. So I think that's going to happen. I've seen so many bullish long-term counts and looks at the yen that, that's going to be, this is more counter trend in the yen. And that down here, trend traders will be looking to put longs on for sharply higher US dollar yen. Okay, something else I'm looking at here is the crude oil. Looking at this daily, uh, broadening top, megaphone, whatever you want to call it. Comes in this week, the line, I don't know, about 59.70. So near the big round number. As you can see, we're already starting to get some momentum divergences here on the 1 hour. See that? So I'll be interested to see where the RSI is if we rally another dollar from here, because we've moved sideways. If that happens, should it happen, the 4 hour was not in alignment with the one RSI wise, but on this next push up towards that red line that could disappear, just like red lines of former presidents. We'll see how valid it ends up being, but considering that this is a potential reversal candidate up at new highs this week. For all the precious metal heads, I found a line that has been pretty effective, and you may want to take a screenshot and draw the line. So you don't know if you really have a good channel line until you see retests or rejections of it. So this is a long-term daily, as you can tell on this daily. It's not classic, right? Because, it didn't include this. It showed the breakdown here. But what's interesting about it now is that back under 1304, I was saying would have been a decent short because, besides it stalling at the moving average here, back inside the underneath the channel was good short. But what I like about it is so far we had the rejection of price. This was Friday, and maybe we're going to get there again. But I tell you, if we close back over 1308 now, we could probably look for next levels, 1320 or something more bullish is happening. But as long as we stay underneath here, it's very possible that this may have been A and we're getting an A, B, C, maybe 1308, maybe a lower high. But I think that this red line in gold is going to be pretty important, kind of a pivot area for you to be considering. Also, for dollar bulls, this is a big week. I think a very important week, and the 96 level is pretty important to me. We're starting to get some non-confirmations. I don't think we bottom. I think 96 is likely down here. We'll see what happens down here, but this is going to be important for the intermediate term, I believe. We start closing back under 96, and we're right at some moving averages here on the daily. But, we could peek through it. I don't know. Maybe we hold today. We'll see what happens into turnaround Tuesday in the Fed. But back under 96, and for sure under this moving average, 95.70, which was this low. You have something else happening in the dollar, and we're probably headed towards 94 at least, maybe 92. So big week for the dollar to maintain the integrity of its uptrend for people that are looking for the Dixie to trade in the 100 range or higher. To me, this is a very important week, and the leadership today, which is different than it has been the euro. So euro really right here between here and 114. I think we need for it to start rolling over. But I'm going to be keying off the 96 Dixie area. So what? Say for example, I want to put on shorts for majors. I'm going to key off this to do it, and then take a look at what the majors are doing, and if what's the weakness, what's the strength, and so far it might be Kiwi starting to dog it a little bit, and if I think uh, the yen has downside and the commodity currencies might be under pressure if gold fails, think that there's possibly a decent short happening here in Kiwi yen. I'm not saying we can't trade 76 or higher, but as you can tell, these new highs aren't confirming. If people were calling this a breakout Friday, it's not breaking out anymore. And I think that's really about it. I want to see what the S&Ps do. Some people are talking 28.45. I've seen 28.78. I can say this for the first day in several weeks. Nasdaq's been way, way, way outperforming every other average. Prior to last week's rally, when you look at it, the Nasdaq had peaked at 72.10 before it pulled back and gave an outside week that was totally blown away. I was wrong by last week's move. But look at that, and then compared to the S&Ps, we barely took out that high. It was 28.21, so we're 6-7 handles above it compared to Nasdaq. And today Nasdaq isn't really so far um, outperforming S&P, so maybe that means we're getting closer. And I really want everyone in here right now, if you haven't done so in the last couple of years, is to make a commitment. For things to work in your life, if you're always accustomed to just getting everything for free, then you're going to have a hard, everyone else is in business too. So if you act like that, you're going to have a hard time getting paid for whatever you do. But if you live from abundance, you don't worry about what you do to invest. And this is an investment in your trading career. And, I teach surround yourself with traders better than you. And so it wasn't just a teaching. I did it 2 years ago in April. The team's the best. And, I've been around for a while, guys. It's the best I've ever been a part of. So, better late than never. So make a commitment to becoming part of our community and not just try and get the edge and face and, oh, yeah, and that's free and I didn't even have to pay. Wrong attitude. So if a face is helping you, the way to say thank you and to sow good seeds so you have a good harvest is to live on a two-way street. And that means give, it means receive. It doesn't mean just take. Okay. So, I couldn't be talking about this unless I understand what that mentality is, right? And have done it in my life, trying to, always get the best deal and grinding people out and negotiating back and forth. And you know what? Use your energy for moving forward and, don't be penny wise and pound foolish. And by pound foolish, don't be long after we have a three drive to a top formation in the pound, which I think is a possibility. Uh, I probably covered things that, I know Blake's really on cable and has some ideas, but I think there still is a possibility. In fact, we may have had it this 1, 2, 3, but I think there's one more drive. I'm looking at this 1 hour. Here's one, here's two, and want to see what it looks like up around, maybe a couple hundred pips higher. So we'll see what happens up there around 134.5 to 35. I looked at DSI, and everyone that is bearish a dollar but doesn't want to be long euro. They're all in cable. I'm not saying it's overbought. I think, DSI is in the mid 30s or 40, but I think there are more longs to be liquidated out of cable on a big dollar rally than euro, just based upon the sentiment. So, it's going to be a tougher trade up there. A lot of people be calling it a breakout, but I'm going to be stalking it up there and see if the RSI stuff uh, gives me some real nice glaring divergences to take advantage of it. So, everyone hearing my voice and the recording later, let's have a great spring season together. And your best first step, besides being here in face and hearing Blake and then Steve, and God, I have a great guest, Garrett Patterns. He's with Avi Gilbert, who's a very talented trader. So it's going to be a great interview. So, join our family and be part of it and start living from abundance instead of scarcity, and invest in your trading career and surround yourself for, especially if you've only been trading a few years, you need to hang out in that chat room at least 5 hours a day, because you're not going to learn how to trade till you put in the time. Okay. And in our business, it's screen time. So the only way to speed up your curve is to work hard and be there and watch and absorb what people who are doing this for a living are doing. And you have the ability to ask questions, and they're very helpful in there. So I'm such a big believer in communities, and we have a great one, being led in there by Amanda. Joe's in there, Blake's in there all day. He has been here before ForexAnalytix with a bunch of the people in there. So face as the tip of the iceberg. Make ForexAnalytix a major part of your trading day, which is how we design this, so that you could absorb wisdom and knowledge from others. And I believe in everything I said right here. So hopefully some will act. And Blake, that's the end of my act for today. Always look forward every day for the whole team, you and Steve, and to get clarity with my banter and some of my ideas. It always helps me to know and see your charts and see Steve's charts to know what you're thinking in here. So I turn it over to you, buddy.
Good morning, Coach. How you doing?
Good morning, bro. I'm
It
fine.
is well. First of all, let's acknowledge the fact that it is a very slow morning once again. I mean, we woke up to just really tight ranges, and
Yeah.
we're hoping that the market like kind of wakes up here. this week with the FOMC and
Yeah.
all the other events that are happening. But the euro continues to grind higher, and one of the things that's keeping the dollar under wraps at the moment is just the lack of volatility. So when you have zero volatility in the market or very low volatility, and you can see the VIX, when you have very low
Yeah.
volatility, that's in, obviously the VIX, you're talking about the S&P, but you just have low volatility in general. It really.
What's your vibe for the Fed, Blake? Because I know you like Peter Bookvar, right? We've
Yeah.
had Peter on quite a few times, and I tweeted this, and one of Peter's recent statements is great. He says the Fed is not data dependent; they're S&P dependent. So after this huge rally, they don't have to talk like doves and sit together and hold hands, Powell with Bernanke and Yellen. And the market, after Draghi, is expecting the Fed to follow with similar kind of dovish talk. Maybe they're going to be surprised with the S&Ps after this big rally. They don't have to act that way.
Yeah, my thoughts about the FOMC is that everybody's looking for a dovish Fed, and I think the risks are that the Fed, is not as dovish as the market believes, and I think that could, ultimately lead to a dollar rally. But everybody is expecting a dovish Fed. So and as far as being S&P
dependent.
Well, this kind of goes back to the Bernanke
put.
The Bernanke put. We got the Powell put, and so as long as the S&P is not under pressure, then the Fed might continue to be dovish, and that's another reason why the market feels that the Fed could continue to stay dovish, just to support equities. But I think that it's hard to ignore that the U.S. economy. I mean, it's slowing, but so is the global economy. But also that it's outperforming the rest of the world at this time. So anyway, that would be my initial thoughts. But
thank you, buddy.
Yeah, let's go ahead and let's take a look at some of these majors and where we're at. And Steve, you guys are very fortunate. Steve's back finally after being gone this last week in New York. So it's nice to have Steve back in the saddle. But let's take a look at some of these majors. So here's the euro. The euro is approaching the 78% retracement. Now, if I had to guess, and I'm not shorting the euro right now, I'm not. But it doesn't mean that I won't. We are attacking a downtrend line. You can see it coming in probably around the 78% retracements. Let me get rid of this and let me pull it up for you here. So the 78% retracement, which is 113.70, that's going to probably cap us near term. And like I said, if I had to guess, or what I was saying is, we are going to be somewhere around here. Going into the FOMC this week. So can you short the euro here with a tight stop, hoping that we get back down towards 113.20 by Wednesday? And I think that's probably pretty logical. I don't know how bearish the market wants to get the dollar ahead of the FOMC. But like I said, on the bank research that I've been reading, most banks are expecting a dovish FOMC. So there's a risk of a continued breakout. But the also a risk here. So you'd be talking about a move above 114 and and higher, and that's going to frankly it's going to unjar the market a little bit, dislodge the market a little bit if we get a move above 114. If we start climbing above 114, I think that'll give us a little bit of at least volatility in the FX market, and that's what we are really hoping for. Now going into like the cable, the cable, it's holding up pretty well. I've been wondering, and this is hasn't happened and hasn't materialized yet, but I've been wondering if we were going to start spiking above these highs above 134 and really start to squeeze squeeze out some some shorts here. I was thinking, man, that the pound seems pretty bid. We might start rallying above the 134, especially going into the parliament vote going into tomorrow, which, as a matter of fact, Stelios might have a little bit better uh, uh, flavor of what's happening on Tuesday. Stelios, are you here?
Hello, hello. Good morning,
Hey,
everybody.
good morning. So
Yeah.
what is happening on Tuesday in the UK that we need to be aware of?
Well, it looks like there's going to be another meaningful vote. I try not to laugh, but anyway, it's going to be apparently a third vote for some kind of an amended deal that May is going to bring. Now, the interesting thing with the previous two votes is that the margin of failure has been narrowing, but still it's quite a long way from being 50-50. Philip Hammond, the Chancellor of the Exchequer, said in an interview that May will only, or at least it looks like she's only going to put another vote to the table if she thinks there's a good chance or a strong chance that it's going to be approved. So this was going to give us a hint. If indeed we get a vote tomorrow, it means that her talks with the DUP, which are happening today, have yielded some kind of result. This is just an indication. I think it's going to be a good indication on how close this is going to be. But this is what we have tomorrow, expecting.
Okay, so and Simon just wrote in the chat room, Prime Minister May's spokesman, no plan for meaningful vote tomorrow. At the moment, talks with the DUP to conclude well to bring it back if no resolution by Tuesday evening. Last chance to table the vote is the night before. Prime Minister will go back to Brussels and ask for a long Article 50 extension on Thursday, and that's via Kate McCann via Twitter. So maybe we won't have a meaningful vote tomorrow.
Yes, maybe. Thank you, Simon. Actually, one other thing we need to mention about the Brexit is that we had some rumors early doors today that Salvini, the Deputy Prime Minister of Italy and leader of the Lega Nord party, was going to veto an Article 50 extension. And remember, it has to be approved unanimously by all 27. So that was the rumor. Sterling dropped, and then Salvini actually came in or a spokesman for him and denied it. So a few games being played here. We know what politicians are like. So it's not, an Article 50 extension is not a done deal. We have to remember that. I think it's going to happen, but it's not a done deal for sure.
Sorry about that. I was coughing. So thank you.
I really like that chart, Blake, you have up in the cable. So I'd love to see you tag that red line above there this week.
To give you the 3 drive?
Yeah.
To maybe move just above 134, continue to squeeze out some traders.
Yeah.
But my biggest fear, being looking at the dollar, is that a real big move in the cable could spark some sort of bigger squeeze in, like, let's say the euro, or so a bigger downdraft in the dollar. Yeah. So if you're long the dollar, you got to be a little careful here if the cable really starts to move up. But I keep, Stelios, and thanks for the update on the UK. I one of the things that has prevented the market from really moving, especially like the last couple of weeks, has been the uncertainty surrounding Brexit, and then also what's happening with the U.S. China trade negotiations, which continue to get drug out. I mean, there are indications that we're going to get drug out till June now, and that's, I mean, as a trader, I'm just hoping there's some sort of resolution quickly, so we can get some direction in the markets once again. But right now, it's the low volatility environment. It continues to rule. So I'm going to take a quick look at some of the other majors really fast. So we got the Aussie that's pushed up towards the 618 retracement. We came very close this morning. We came to 71.20. There's a nice little bit in the Aussie. Remember, we do have the RBA meeting minutes that are happening today or tonight, which would be Tuesday morning in Australia, but something that we should pay attention to. The Kiwi still in our triangle. The dollar Canadian, I'm long, and it's come off, from Friday's move. It's come off a little bit, but crude oil continues to be strong. Dollar's weak, and I have to say that the dollar Canadian being down, 12 pips when the euro's up 30, or you've got the Aussie up 24, the Kiwi up 20, and the dollar Canadian is only down 12 pips. It's actually acting pretty well considering what's happening with the the rest of the dollar pairs, minus the cable, obviously, that's kind of underperforming right now. The dollar peso broke below channel support. It's minor channel support, but remember the real key support in the peso here is going to be down at like 1910, 19 somewhere like down there, because you got this here. I'm going to put this into I want to give it a little dotted line so you can kind of see it here, see it a little bit better. You have this little prior triangle breakout, and then you have this longer term uptrend line that comes into play also right around the 1905 ish level. So we might continue to make our way down there, especially if equities continue to stay strong. So nothing's happening with the rand. The dollar Swiss, we've slipped to parity. So we are at the 618 retracement. You can see right here, we're at the 618 retracement in the dollar Swiss. We came right down to parity. We might bounce a little here. I really, kick myself in the butt for not staying short the dollar Swiss. It's hard. As you guys know, it's hard to stay in some of these positions because there's just no volatility. So you got to stay in them for a long time with some of these trades, and that's kind
also
of
bad carry as well, right? It's very bad carry.
It's a very bad carry if you're buying Swiss francs. It sure is. It's a huge negative carry. So anyway, the markets, like I said, they continue to stay pretty slow here. The dollar yen is wound up really tight, you can see, and this is actually probably the way I should draw this is going to be something like, oops, let me get rid of it. There we go. So the dollar yen looks something probably more like this as we just continue to consolidate and wait for the market to actually make a move. So with that being said, I'm gonna pass it over to Steve. I know Steve's back, and I want to allow him to talk about all the yen crosses and all the other cross rates and some of the other major indices. So Steve, how you doing?
I'm good, Blake. How have you been?
Good. Welcome back.
Thank you.
It looks like you did a lot of family time this weekend, which was probably well deserved.
Yeah, it looks like I shouldn't have come back, actually.
Yeah, this market is not.
Not
exciting, but the lack of volatility, it only stays so long, and that's one thing that you guys have to realize. I've been doing this whole, trading the markets thing for since the mid 90s, and
you're so old, Blake.
I am. I'm not as dinosaur as you, but I've been around, but there are periods of there are periods of very low volatility. There are, and you kind of got to walk, get through them, and it's not it's common. I mean, I don't want to say it's common, but Dale, how many periods of low volatility like this have you seen in your career? I mean,
no, not more. Let me tell you in advance, Blake, not more than what you have seen, because as you very well know, prior to your market experience, the market was not so heavily manipulated as it is now.
Yes, this is probably true. Yeah, this is probably true.
Central planning. Yeah.
Yeah, exactly.
Yeah.
So
that's newer stuff.
Yeah, that is true. It is newer
we
stuff.
started it, you think? Yeah, the U.S. Fed started it globally, and everyone thought it was a great game.
Actually, Japan has to take.
Oh, you're right, Steve.
Has to take the medal for monetary innovation.
Since '89, 89 was the peak in the UK. So I don't know.
Since the beginning of the '90s, the Japanese started it, and the US followed suit, and afterwards the rest of the planet, right?
I like
one
that.
by one.
QE, made in Japan.
By the way, this is completely off topic, but you guys in Europe, you guys have time change this upcoming weekend, correct?
I think so.
Not this weekend, the weekend
or the week after.
Okay. So it's still basically 2 weeks.
Yeah.
Got it. Okay. Well, Steve, I passed you the charts. Good luck looking at some of these majors, and you guys have a great day today, and I'll catch you in the chat rooms.
Thank you, Blake.
All right. Thanks, everybody.
Hello, Steve. Stell, hey, buddy. It's so great to have you back. I know Stell had some glory days in the UK, and probably looks back at those days, as, first of all, he was younger, and, he bought a Ferrari. He couldn't afford the insurance, but he had a Ferrari. And probably after talking about what's happening in the UK with Brexit, you probably don't have the same longing to go back there, with having to talk about this every day.
Well, I'd love to go back on holidays. I go once a year, but
okay.
I think things have changed. Things have changed a lot. I mean, since I lived and worked there, pre-crisis, it was very, very different. But now we have a big question mark in front of us, and we really don't know which way it's going to go. So I'm very interested to see how things progress.
Yeah. Okay. Well, I just wanted to take you in a time machine and bring it back to when you were
shit shows. This is probably the biggest, right? I mean, and something tells me that we're probably midway, through this. I hope I'm wrong. I really hope I'm wrong, but I'm totally afraid that we might have a lot more of this going on until we finally get some kind of a resolution of what will happen. My intuition from what I've been seeing lately is that they'll somehow make this go away. I don't think that anybody is willing to go through the process of
a hard Brexit. That's not going to.
First of all, I think that there is now the obvious realization that there is not an easy Brexit.
Right.
Of course, that does not mean, I'm not arguing that the UK should not go on with the process of Brexit, right? There have been a lot of mistakes happening, many of which are political mistakes from the moment they decided to have a vote on the Brexit, in the way that the vote was conducted, in the information that they gave prior to that. But once that has happened, then there is a political issue that you've gotten people to voting, right? And once you got the vote that there should be a Brexit, then it's a totally different thing, because there is not a real political or democratic argument with not going through with that. But as it seems, they're going to attempt to go through with that one way or another. I mean, not going through with that one way or another. So we need to see how this is going to unfold. Until then, I'm pretty sure that cable is going to, the pound in general against any pair, is going to remain extremely choppy and will keep reacting up or down to any kind of news, any kind of
so does that put Steve, does that put this pair in your avoid camp for now?
On a big extent, I would have to say yes. I mean, I've lost interest in pound pairs for some time now, because I don't want to have on the back of my mind that I will wake up in the morning and somebody will have said something that might not even be valid, but temporarily will have moved the market for 50, 100, 200 pips. Who knows?
Right.
Of course, that is always the case with anything that you trade. But why take the added risk? That doesn't mean that I would necessarily avoid at all costs, taking a position. But let me put it otherwise. I would need to be very, very very convinced that from a technical perspective, there is a great setup to consider taking that in comparison to taking another position that doesn't have
what
the
great mentoring. So when the fundamentals are unclear, but you have, confluence and confirmations that will overrule. You're going to go with that despite, because you have seen patterns and the things that you trade work, and you're going to go with that rather than the fear of a tape bomb, because maybe the charts are telling you where the next tape bomb is coming.
Let's take, I have started updating today, now that I'm back, my 4-hour charts. I mean, very, to detail, which, usually I don't trade.
I saw Jason working with you yesterday. Your son did all the analysis. I've already reported you. There are child labor laws, you slave driver. Okay. But I know Jason, all the analysis for candlesticks this week, guys, is Steve's son, Jason.
And basic technical analysis, all of visualization. Yeah.
All right, buddy.
So yeah, for example, let's go down to pound Aussie, and I think it's a good idea since Friday we haven't really had any price movement, so it's a good idea we had a look at things on a 4-hour chart. Basically, for the reason we already explained, that there hasn't been much happening, so we need to go down, to a lower time frames, to see some things. So let's take, for example, pound Aussie, since we were talking about pound pairs. I'm monitoring this formation here for pound Aussie. I mean, it looks like an expanding triangle here. We almost made it to resistance. We also have this ascending channel within this. So, for example, speaking about strong signals, we also have some RSI divergence very clearly seen here on the 4-hour chart. Right, you can see it here. So you can even see this as a three drive higher. So, if we do get a breakdown here in the pound Aussie and we make it below this channel, I think that, this is going to be a nice indication that we're going to have more weakness ahead. Until that happens, you need to respect this ascending channel, keeping in mind that this nice confluence of resistance is at 189.30, which is the 161.8% of this corrective move lower, and this ascending trend line resistance is going to be likely a hard level to crack, right? Anyhow, let's go back to the dailies, and then we're going to switch back to the 4-hour charts once again, because I wanted to start today by having a look at the bonds. So we have been talking about the treasuries being here on a nice triangle. The triangle actually ended up breaking to the upside. So theoretically speaking, this opens the door for another move towards the 61.8% fib, which comes almost at 124. Obviously, that has implications having to do with the yields, because that move would imply that the treasury yields, which we can see here, would depreciate towards 2.5%, right? The 10-year would depreciate towards 2.5%. Now, today I was having a look at it on a 4-hour chart, and on a 4-hour chart, you can actually see that this move higher from the triangle so far, looks potentially like a wedge. And so far today, we are seeing some weakness in bonds. So I have to admit here that I'm monitoring here in the short term, and I want to see what's going to happen, because if we actually do break down from there, I think that we can at least come down to retest the triangle before we move higher. So bonds for a short-term trade are in my radar at the moment. Obviously, medium to long-term trades at the moment, the vast majority of them does not look very promising. One of the things that still looks promising, I have to say, and if you haven't seen Gregor's and my combined like interview about our trade ideas on on Real Vision, I propose you do so, is USDMXN, because USDMXN has been breaking down from this nice channel. I think it's likely a bear flag, and from an Elliott wave perspective, this is probably a fourth wave that is now complete, a zigzag, an ABC. So we're now testing the 61.8. I think that there is a decent potential that we can push lower from here towards 1860. 1860, in my opinion, is quite a powerful level here. If I zoom out, you can see why, because we have this trend line support, this symmetrical triangle long-term support. So I would be very, very careful if we made it there. I wouldn't be, pushing my luck looking for more downside. Also, if you have a look at the RSI, you can also see that the RSI is also confirming break lower. So I think USD/MXN still looks decent for a medium-term trade to the downside. And equivalently, our other trade idea, which was copper, as you can see here, copper still trading within what looks to be like a bull flag. I think that a daily close above 295 will confirm that one more leg higher has begun. First resistance should be the 61.8 at 302. After that, we have a very, very nice confluence of resistances. It's actually a triple confluence of resistances. One of them is actually missing, so let me draw it immediately. One of them is actually the width of this rectangle. So if we go to there we go. There you go. So as you see, this is a triple confluence of resistances. We have the 100% extension of the rectangle's height, which comes at 316, 316.5. We have the 78.6 of the last move lower, which comes at 315 roughly. We also have this horizontal support resistance area at that, confluence of levels. So I do think that if we make it at 315, 316, that's going to be a very powerful area. And I do think that, if we make it there, taking profits and looking for a reversal lower will be a good idea. Gregor thinks the same thing from an Elliott wave perspective as well. He thinks that this whole move here is a correction, probably an expanded flat. So this was like an A, B, C, so an expanded flat, which can reach that level before we see lower prices. So Gregor's interpretation is after we find a high, one more high. Yeah, we might actually see a lot more weakness. And if that interpretation of an expanded flat of this area being corrective, I'm going to mark it here, this area being corrective of this move lower, then that obviously has a lot of implications about risk as well, because as you very well know, Coach, if we do get a major, if we get a major rejection from there and we actually start seeing a lot of weakness in copper,
that
the
means
chances
China, that means whatever China's been trying to do isn't working, everything, Steve. And what I thought of when you said it could make it there? If it could make it there, if you can make it there, you could make it anywhere. It's up to you, New York, New York. See, you're still in New York. Your head's still. But yeah, that would be a very bearish outcome for the global economy.
Yeah, actually, yes. Yeah, so, but now looking in the medium term, short to medium term, this formation so far looks very corrective. I mean, it's exactly what you want to see from a flag, right? So in the short term, we have every reason to be looking higher. Also, keep in mind the medium term picture, which is what we had a rectangle, we broke higher, we came down, we retested this breakout area, and this formation, as we said, is corrective. So I think it looks like a very decent opportunity for another move to the upside. Now, what happens from there? Yeah, it might as well lead to a bigger rejection and a move lower, but that's something that we can examine, at a later date. Equivalently, By the way, Joe, any idea when they're going to publish my medium-term idea? Because that's actually on gold, I have to say. If you have any idea, let me know, please. You you had told me might be Monday. So equivalently, I think that having to do with the rest of the precious metals, actually, gold's move higher. I view it as corrective, at least in the short term. I would expect at least one more leg lower towards 1265. And the same applies to silver. Actually, I think that silver looks even more clear in the short term, because I see two interpretations in the short term. One is that we're going to get this, like an ABC. Another one is that we might get some little triangle here for at least one more leg lower. So for silver as well, I think as long as we remain below 1577, this 61.8, I think the path of least resistance for at least one more push lower will remain to the downside. Now, if we have a look at the gold-silver ratio, there's not much to do here. We remain trapped within this ascending wedge, which, given the fact that it still has quite a decent height, it can oscillate within.
How about a right shoulder here, Steve? I brought it up, and maybe if it doesn't go anywhere in here, it could be a right shoulder.
It could be, but we need to get down. We need to get down there so we can then talk about a formation that is now clearly visible, and then we can.
Either way, they both it's either a sell here or it's a sell up there. I'm just saying that this is one of the possibilities in my view.
Oh yeah, I agree. I think that the closer we get to this trend line, which has been tested multiple times from the market, it's a great opportunity. It's a great opportunity for sure from a risk reward perspective. The closer we can get to 88, the better the opportunity to look for a move lower, right? Yep. Now, on the other hand, platinum still trapped within within a channel, still remains rather weak in comparison. And palladium is like a beast, really a beast. I mean, I've been looking for an opportunity to be long since we were breaking out from here, but this market, as it happens with any market that is extremely strong or extremely weak, if you're talking about a move lower, it has really produced no real opportunities. I mean, it has had minor pullbacks, which were not enough to produce actionable risk-reward opportunities, right? So although I was looking at this move as a corrective move since the beginning, like a double zigzag, I made the mistake of not buying the breakout because I thought I'm going to get, a better opportunity, and the market punished me by never producing one. So yeah, at some point we're going to have a pullback, but this is just a monster move. I mean, just look at the angle of this move higher. It's almost parabolic. I mean, if we zoom out, you can see that this move is almost parabolic, literally. So it is what it is. I mean, palladium remains by far the strongest of the metals, and this was another little consolidation, a little triangle, and we're once again to all-time highs, right? So it is what it is. It's going to remain strong. Obviously, there is no reason why you should be looking to buy it. I've said that plenty of times in the past, but the main reason of not looking to buy it is because there is no risk-reward ratio. I mean, to do anything, where would you place your stop loss? We also have some quite strong RSI divergence here, which you need to pay attention to. Anyhow, in any case, when at some point we break this channel to the downside, I think it's going to be time to be looking for a deeper correction. But until that happens, I just have to be looking at it every single day and wondering when that's going to happen. Now, let's go to crude. We can have a look at crude at a short-term scale, as well. So let's go down to a 4-hour chart in the crude trade. And what we see here is also a series of moves higher, consolidations, another move higher. This was a very a very clear example of that. What we see here as a rectangle from an Elliott wave perspective, this was probably an expanded flat because this high was higher than this high, and this low was lower than this low. So probably this was an ABC, an expanded flat, and we're seeing another push to the upside. I would be careful here. I mean, we came down, we retested this high, it held so far. I would be careful here if we make it towards 60. The 161.8% extension of this move lower comes actually at 59.65. I'm also monitoring this at this ascending trend line. You can view this also as a megaphone formation, right? So I would be careful. The closer we get to 59, 50, 60 level, I think it's going to be quite a decent area to see a deeper pullback from there. But until that happens, you need to respect the upside. Okay, that doesn't mean that I would be buying it up here, but it means that I wouldn't be trying to fade this move yet. I want to see, some kind of a daily reversal that's going to be, strong. Ideally, I would want that to happen from an interesting fib level, and then we can start talking about a deeper pullback. More or less the same story, not as strong, but the same story as the one we were discussing about, having to do with palladium. By the way, this is the short-term picture in the USD MXN. I think that the USD MXN is actually about to break down from here. You can see this channel, this horizontal support area at 1960. If we close below it, I do think that we're headed lower, 1870, even 1860. It's what I was talking about before, but you can see it here in the shorter term scale. And, this is also a view of USD NOK. USD NOK, a nice move higher. This is going to be a very nice double top formation if this happens to play out as such. But for this one to play out, I would want to see a move below 840. If that actually happens, I think that USD NOK is going to be a great trade to the downside. But for some reason, especially given the fact that I think that crude is headed towards some strong areas of resistance, I'm quite doubtful that the USD NOK is going to have enough fuel to make it down to 840 and then produce a breakdown and with the equivalent follow through. So I think that looking at a move towards 840 as a buying opportunity until proven otherwise is the way to go. Let's have a look at the USD CAD as well, since we talked about
Steve, I just want to remind everybody we have Norges Bank on Thursday this week, I think, and they are expected to hike. So it could be, a trigger for at least a short-term rally in USD. Not could be if they're dovish or if they don't hike. I mean, if they don't hike, it's gonna fly.
If they don't hike, it's gonna fly.
Yeah, yes. But it's pretty much fake. Yeah.
Yeah. Now, having to do with the USD CAD, there are two interpretations here. I'm not bullish yet, and the reason is this. If you draw the parallel of this trend line, you'll see that we actually so far got rejected from the parallel if you extend it from here. Okay, so two interpretations here. You want to be bullish, you have every reason to do so because the risk reward is there with you. If you want to interpret this as a triangle, we broke above it, we came down, we retested it, it's so far holding. So from a risk reward perspective, being long against the recent lows, against, let's say, 132.80, looks like a very decent risk reward opportunity, right? Now, on the other hand, if we invalidate this point of view, then you can look this as a channel, and in this case, we might go back to my initial expectations that this might be one move lower, and then a correction to this move lower, and then one more leg missing to the downside. Okay, in which case we might see another push towards like 129. So I have no clear view of what's going to happen from here, but I have a very clear view that with this 132.80 to 133 area is going to be key for us to determine which of the two interpretations we want to trust. Okay, so you want to be bullish, you can be bullish here against the recent lows. You want to be bearish, you want to see this trend line breaking, and then you want to see a move towards this confluence of supports there. And if that breaks, I think we should then talk about an extension. We can actually now measure. I mean, taking into account that this is a possible interpretation, we can measure what an extension, where an extension would take us. And in this case, yeah, 128.75. So, roughly 129, as I told you, that would be a measured target in this case. But of course, it's too early to talk about that. It's just planning in advance for one possible outcome. But for that to start playing out, I want to see a break below 131.80. Okay, so that's how I view USD CAD at the moment. Now let me open the question box actually, because I've been talking about several. Lost audio, is it just me? I think it's just you. Audio seems to be fine. Still think CAD yen and Aussie yen will be the best shorts when the markets turn. I don't disagree with you. Actually, let's go on the 4-hour chart with the Aussie yen. And this is actually what I have here. So we had, I'm zooming out so you can see this. So we had a breakdown from this triangle. Actually, if you look at it on the daily, this is how the triangle looks like on a daily chart. So we had a move higher in what looked initially to be a wedge. Actually, we got a breakdown from the wedge, and then we got another push higher, not an impulsive way. I mean, if you look at all three moves that we've had so far, this move, not impulsive. This move, not impulsive. This move, not impulsive. So we've had several attempts to rally, but there are, two things in common to all those three moves. First of all, they never managed to break above this trend line. Okay. Second of all of those three moves have been very overlapping and choppy. So I agree with you. I'm not convinced by these attempts of this market to rally. In all actuality, I think that a breakdown can easily end up accelerating and have completely different characteristics than the characteristics of this move, this moves higher that we've seen, because this move lower was quite impulsive, right? So I would want to see at least one more move that will have the same characteristics to the downside. So I agree with you. If we break down in Aussie yen, I do think that the move lower can easily end up accelerating and have completely different characteristics than the rebounds had. And we very well know that Aussie yen is quite, tightly correlated to risk. So yeah, if risk sours, I think that Aussie yen can really break down. Now, if we go to the CAD yen, I haven't updated it within a few days, but if you have a look at the CAD yen on the 4-hour chart, you can also see here that we've had this big channel. We broke down. We had a move that looked very impulsive to the downside, and the move higher has also corrected characteristics. So I have to agree with this as well. I think that CAD yen looks like when and if it fails, it's also going to accelerate to the downside. So I agree 100% with your statement about Aussie yen and CAD yen. I think that both of them will prove to be quite nice trades to the downside. But as you said, we need to see some risk of move for these, for these breakdowns to actually happen and play out as expected.
Yeah, just wait for the full moon.
So I don't subscribe to that point of view, as you know very well. But whatever, whatever makes you tick. Right?
Spring equinox, full moon, technical divergences, it'll all be there. Be patient. And the Fed. It's all Wednesday, man.
Yeah. Speaking of which, I'm also monitoring on the S&P. You can interpret this in the short term as an ascending wedge. I mean, so far, there is clear lack of momentum in this rebound. Of course,
I'd like to see it under 20, Steve, but it could you're right.
Yeah, nobody says that something like this can happen, right?
Yeah, like copper.
Yeah, exactly. We can easily do something like this. But as you said, and I totally agree with you, 28.12, this area should now act as support. So I would definitely want to see a move below 28. To be on the safe side, like 2,800. Then we can be yeah, then we can be talking about a false break higher
Right.
and something playing out to the downside. Until then, you need to respect the upside with the next upside target being, now we need to go back to the
I've
daily.
been very disrespectful of it, and you know what? It's disrespected my account.
I have no doubt about that. So
You're
far,
not
it's
scaled
this.
in anymore, are you?
Oh no, 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 I do have half a
Nope.
position. Yeah, I do have half a
Okay.
position. Yeah,
Well, then, yeah,
uh, yeah.
it's
Um,
disrespecting our
the,
scale-ins.
yeah, but I'm not really worried about it.
All
The
right.
next
I
the
won't
next
either
upside
then.
the next upside target on the daily chart is this confluence of resistances roughly at 2870, 88.6% fib, and this horizontal support resistance area that was also the high that we had after this mania phase that ended up at the end of January. So I think that 2870 is going to be, quite an interesting area to watch if we make it up there. Okay,
Yeah.
but on the daily chart, that's the next area of interest to the upside.
And that's
Uh,
88.6. Okay.
Joey is asking if we're
Okay.
going to get mooned this week.
Yeah. All right. Well, we'll see. Right now we have Garrett Patton, who Steve, I discovered him on Twitter. That a lot of our guests come from there, and I see tweets and I see some interesting work. You could tell, just like after you've been around for a while, you could tell that someone has some great insights, and we're fortunate to have Garrett come in here today and speak to us. He's ready to go.
Absolutely. Then no need for me to go on for longer. Anyhow, as Blake said, we haven't had much happening in the market so far today. So we will have all the day tomorrow to reassess. I'm guessing that Gregor might be with us as well tomorrow. I'm going to ask him
Cool.
later on. So enjoy the interview and see you tomorrow.
Great to have you back, Steve.
Great to be back.
Okay, Garrett, I'm now making you the presenter. Looking forward to our conversation. So you'll see the drop-down menu that's going to give you volume with your mic.
Can you hear me now?
Got you, Garrett. Loud and clear. It's really
right.
it's really a pleasure to meet you.
It's a pleasure to be on. Thank you for having me.
Yeah, it's great to have you on today. I'm waiting to see your screen. So, like I was saying to my associate Steve, I saw a few of your tweets, and I go, "Wow, this guy's got a great eye." And
Thank you.
I know you're an Elliott Wave practitioner, and I have a
Right.
question because there are a lot out there. I mean, it's
Right.
a very popular methodology, and I always ask Ellioticians, what separates you from other people? So if someone used GAN, it's not the method, it's who's interpreting the method. So I know you work with Avi Gilbert,
Mm-hmm.
and I've seen Avi's work, a great trading mind. I've seen some of his forecasts work out and be very prescient. But where I'd like to start, Garrett, is your first job in the business, or how you got and what you were doing before, and just a little bit about the journey that you had to where you are now as a market tactician, practitioner, working with a great mind like Avi Gilbert.
I actually did not have any formal schooling in finance or anything market related. I actually went to school for film studies. I got a BA and BFA in film studies, and was originally doing the post-production side of things. I was doing video editing and motion graphic design as a freelancer for companies in Denver, Colorado. And began basically trading on the side to supplement my income.
So is film still still a passion of yours? I know sometimes when we're young, we make a selection. Like I was interested in journalism, and even though I'm not, didn't pursue a career in PR or broadcast journalism, I'm able to do that with what I'm doing now by interviewing people like you. You still have passion for that industry, the film industry, or is trading really replaced it totally?
I do. I definitely do still have a passion for it, but yes, I would say that it has been somewhat overshadowed by trading and technical analysis at this point. But there's I would say some bit of overlap, and I think that's why maybe technical analysis and Elliott wave theory and charting, etc., really spoke to me because of that aesthetic portion of it that I really enjoyed when I was doing motion graphic design and stuff like that.
Okay. All right. So let me ask you this: when you first started trading, how did you gravitate towards Elliott wave work, and did you experiment? Sounds like you're self-taught, or perhaps you did have mentors. Tell us about how you ended up making Elliott your model for how you're going to attack markets.
I imagine that my journey or my beginning with trading was similar to a lot of people who just start trading. And I think it was in 2011 in August, I basically was hearing all this news about Europe and crisis and the euro, et cetera. And I think very small position, but went short the euro and went short European equities at that time based on the news, and of course was probably right at the bottom. And so then I found technical analysis, and I was doing very well, just very basic RSI, MACD sort of trading based on those signals.
Right.
Got a little bit overconfident that I think many traders can initially do, and then found that to be unsuccessful because I really didn't have a trading system built around it. I wasn't I basically was holding on to positions too long, or I didn't really have any sort of methodology or trading system that I was following at that point yet.
Okay.
So I went back to the drawing board once again and discovered Elliott wave theory, and the whole theory behind it is what really made me the most interested. And it just made sense as far as why the market was doing things that it was doing, and it was not focused on fundamental analysis. And after that, then I found Avi Gilbert's site and really thought that he had taken Elliott wave theory to the next level with his application of Fibonacci pinball. And to go back to one of the questions you asked earlier, what sets me apart, or Elliott wave trader apart from other Elliott wave practitioners, and I would say that would be Fibonacci pinball.
What is a Fibonacci pinball?
So
pinball,
Fibonacci,
like pinball machine?
Right.
Can
So Fibonacci.
I buy one for my office? I'm kidding.
Go ahead.
Yeah,
I grew up with those at the bowling alley playing pinball. But why do you call it pinball? Because of the way the market bounces around like a pinball machine?
Between very specific fibs.
Bumpers, and if you have flippers, you could save the ball before your account goes down the drain. Graveyard saves, we used to call them when I was a kid. So pinball is random, or you guys have found patterns within Elliott for this pinball?
Right. So there's very specific fibs that the vast majority of time impulsive structures will kind of bounce in between. Hence the name pinball, Fibonacci pinball.
Mm-hmm.
But basically what you do with Fibonacci pinball is within an impulsive move, and why don't I go ahead and show you an example here if you can still see my screen.
Can.
Is what you're doing is you're taking the measurement of wave one of the impulse, and I assume you are somewhat familiar with Elliott wave theory, correct?
Yes, I'm dangerous.
Okay. So you take the measurement of wave one using your Fibonacci extension tool, and then you project that measurement from the bottom of wave two. And that basically gives you the fibs going higher that you use as targets, and that price will bounce between specific fibs as it fills out that impulsive structure. So wave one of the third wave within an impulse, so in this case, this wave one here, will typically target between the 382 and the 618 extension. And if price targets around the 382 extension, then the most common target for wave 3 of 3 is the 100% extension. And let me bring these fibs to the forefront here so that you can see them.
I just have a question here, Garrett. I understand the horizontal lines are, different fib measurements from different waves. What are the fan lines that start at the low? Do they project time? Is that what those fans are for?
To an extent, but not quite, I would say, as accurate as Fibonacci price levels.
Okay.
So they're definitely secondary in my analysis, but they do kind of give me a general region or timing, I would say, to place the label. So when I see intersections of the Fibonacci price levels with the fan levels, then
you have confluence, and that gives you some conviction about it, right?
Right.
Okay, cool.
So going back to Fibonacci pinball, and then when you see your wave 3 of 3 hit a 1.0 extension, then your wave 4 of 3 should hold between the 764 and the 618. And assuming it does so, then your wave 5 of 3 should target the 1382 extension. And these might be a little bit faint or small, but if you can see here, that was where the high that we saw last year was made.
Right.
And after hitting the 1382 extension, typically your wave 4 will come back to the 100 or potentially sometimes as deep as the 764 extension.
Mm-hmm.
So that's why you see my primary degree wave 4 label here back down at the 2166 region.
Okay.
And assuming price holds in that region, then your 5th wave should target the 1764 extension. So going, over.
That'll be it, and you're just I know it's a Nostradamus thing. You have it labeled like at the we should complete 4 like by the end of the year. Oh no, by the end of beginning of 2020, which is by the end of the year, and then we have wave 5. The final part of this bull market, right? Takes you up to 23 or 24. Interesting. Nice looking roadmap, buddy.
Right. And again, yeah, no problem. The timing I find much more difficult as far as market analysis goes than determining
that's the art
price.
of it. So that in fact that brings me to a question. So as an Elliott Wave practitioner, you always have a preferred count, and you also have alternate counts.
Right.
So as a trader, or just as a market analyst, do you know when do you know that your preferred count is wrong and we're going to an alternate after a swing high or low or a wave high or low is taken out? And then after that happens, do you move and trade to the alternate or wait for the dust to clear for a little while?
Well, that's one of the beauties about Elliott wave theory and about Fibonacci pinball is there are specific invalidation levels where that count is wrong because it violated some rule that needs to be obeyed by Elliott wave theory. But there are also levels where probabilities will shift very dramatically, and any trading methodology basically we're trying just to weigh different probabilities of potential outcomes.
Right.
So you can still find specific levels where if price crosses that level, then your probabilities for that trade or for that specific count have been changed dramatically. And that might be when you would shift to the alternative count.
Okay.
Does that necessarily mean that I will reverse my position? I would likely stop out below that specific level, which I would have determined before I even placed the trade. But doesn't necessarily mean that I'm going to jump in on the other side of the market. I would wait until another clear setup basically emerged.
Do you ever, because, I have found sometimes that, not using Elliott, but, failed breakouts, like a market taking out, sometimes what would happen in like after a wave 4 triangle and the final thrust, a lot of people will be calling that a breakout, but there are other examples where a market looks like it's broken out or failed, and it's a fake out breakout, and some of the best trades are from formation failures, because most people are trading the obvious formation, and then if it fails, you have a lot of people leaning the wrong way. Do you notice that in Elliott too?
Again, there are specific levels where probabilities begin to typically shift dramatically, but if it really is the initiation of a new move in the opposite direction, then there should be plenty of opportunity to jump in without necessarily reversing your position right where that level happens.
What do you teach your people that are part of your community about leverage, Garrett?
That we recommend only doing it within the heart of a third wave. So that would be the wave 3 of 3.
Okay, so that's your money wave. But as far as leverage for trading, you guys participate in more. Is that the only part of a wave that you guys tell people to trade? What I'm getting at is, I think one of the problems, and maybe you noticed it early in your journey, was you're using too much leverage, and you're not letting your trades breathe because of how much leverage you have on, and that reduced leverage lets people sleep at night, and also gives you a chance to give the market, the trade, some tolerance to move around, at least daily ATRs and currencies, and I don't know what it would be in S&Ps, but have you found that out too, that people use too much leverage and their stops are too tight?
I would say it depends entirely on the trading plan. If you've built a successful trading plan around using only leverage, then I don't think it necessarily can be unsuccessful or any different than somebody who's not using leverage.
Okay.
However, when you do use leverage, the issue is that you're often kind of competing against time, because typically when you have leveraged positions, that's either through options or through 3x.
Especially
leveraged ETFs, where you do have that issue of time or decay that you're kind of competing against. So in that respect, yes, it can be much more difficult. Okay. But I've seen people who trade only options and do so very successfully.
Yeah, I have too. That's amazing, because I used to have an expression: options are like relationships; 90% of them expire worthless.
Right.
All right. So we have your look at S&Ps. I know that you cover miners is also, and global markets. Why don't we go to like global markets, U.S. market, one of the strongest markets out there. You have a different view on Europe and some of the other emerging markets.
Yeah.
Okay, DAX.
Take a look at the DAX here.
All right.
So somewhat similar kind of opinion as U.S. markets, but yes, as you said, they've definitely underperformed in comparison to U.S. markets. Both they topped earlier last year, and the case of the DAX, it topped back here at the very beginning of the year and saw a lower high in May. Same bottom here in December, but has basically retraced only 50% of that drop off the highs, whereas in the S&P, we're already above the 764 retrace.
Right. Do you like 764? Why 764 over 78.6?
Honestly, I use both, and in the vast majority of situations, they're close enough that it's splitting hairs.
Okay.
But they're both valid Fibonacci numbers, and I would say it's just personal preference. I haven't found one to be.
Let me ask you this, and I do these interviews to edify myself as well as the community. When you're talking about third waves, that's a time people can get aggressive. Is it because you're looking for extensions on one, and is 1.618 an outcome that you see quite a bit, or are there other extensions that are more repetitive than 1.618 in your experience?
Right. So within an impulsive structure, the third wave, the vast majority of the time is going to be the strongest and most powerful wave. So it's where gains are made the quickest.
Right.
Respecting the fibs, using Fibonacci pinball, the most common targets for a third wave based on the size of waves 1 and 2 is the 1382 and the 1618 extension.
Okay. All right. Great answer. Okay. What's the most important thing that you could share with people that are starting off in the business besides signing up with you and Avi?
Paper trade to start with.
Okay.
Until you have established a trading methodology and you have actually practiced it and seen its success, don't put actual money at risk. Paper trade.
Okay.
It's
Let
not
me
as
ask you
fun.
this.
It's not as exhilarating, but
Yeah. When you paper trade, like, that's what guys from my generation did before there were demo accounts. Then if I was wrong on a paper trade, I'd have a little paper cut on my finger. But I wanted to ask you, a lot of people, in my view, don't take demos seriously. Do you recommend people journal while they're paper trading or demo trading? And what I have found is in currencies that it's really the next step, if you don't take a demo seriously, is to trade a micro lot in FX, because at least you get the feel for having something on the line. 100-point move in euro is not going to be 1,000; it's going to be $10. But at
right.
least you have some money on the line, so you get used to something you don't. If you don't have any money on the line, that it's real, and take it. People will take $10 more if they could lose $10 seriously than if it doesn't mean anything in a demo account. Do you agree with that?
Yeah, there is a bit of emotion that comes in when something is actually on the line, as opposed to just a demo account where you know that you're not actually risking any money. So that's definitely good advice, I would say, to start off smaller, and then as you get more comfortable, risk more.
You want to share your look in gold? We recently peaked at around that 1340 level, sold off about $55. The great call I remember from Avi was being long the miners. I think it was maybe it was 2014 or something. Was a lot of them went up fivefold, and so this is the gold or the gold. Yeah, this is gold. Okay.
Yeah, this is gold.
Okay.
So what I am looking for is a possible bottom that we struck here in 2015 is either all of a completed corrective move off of the 2011 high, or as my alternative, an A wave of a larger correction. In either case, both counts suggest that we still have further upside, even if this is a B wave within a larger correction, with the blue count here being the bullish count, where a bottom is in place and we're developing a new impulse off of that 2015 low.
Okay.
So shorter time frame, I'm looking for another 5-wave structure impulse off of this 2018 low as wave 1 of the next move higher, either that C wave or the third wave. And I'm looking for one more high to complete that impulse off of the August 2018 low. So the pullback that we're currently getting from the February high, I'm viewing as a 4th wave. And as long as the support here between 1280 and 1260 holds, setting up a 5th wave higher to complete wave 1, longer correction is wave 2, and then we break out above the 2016 high.
Okay, so this count, though, after a little more of a pullback, which you have either 1280, we already did it, or one more low. If we achieve that one more impulse wave up there, Garrett, everyone's going to be calling that a breakout out of like an ascending triangle or something. So people are going to turn real bullish over that resistance level of 1365. It's interesting, because when everyone's really going to say the market's turning good, you have something completing up there, and then a pretty good correction. That's going to be an interesting time if it unfolds.
Right, and I'm seeing agreement on other charts such as GDX
Yeah.
For example, I do not see a completed 5-wave structure off of the September lows here yet. I see only 3 waves.
Right.
So I don't view, if we do hold and see another push higher here, that it is going to be a successful breakout as a 3rd wave. But instead of 5th wave, that could get people fairly bullish and maybe even extend beyond standard fibs. But
yeah,
that
yeah, that's interesting. I was taught that the miners should lead the way, not lag. In a true bull market, maybe, and the same with oil shares and the underlying commodity. So the fact that you'll have everything in gear once the miners complete this, looks like you have a wave 4 coming in sometime this spring down there, 21-ish, something like that. Yeah.
Right.
So, yeah.
One more push down here
don't you think
is
they
what
should
I
show
plan
leadership instead of acting as a laggard to bullion?
What I've found is that they will definitely outperform
Yeah.
on a general basis, but not necessarily always make the turn first.
Okay.
For example, the low that we saw in the miners was
that's
in
the one.
January of
Avi
2016.
was right there for that. Yeah.
However, the low that we had in gold and silver
We're
was
higher.
in November of 2015.
Oh, okay.
So they actually bottomed before the miners.
Okay.
So I wouldn't say it's 100% of the
Great
time
example.
you're going to see that leadership.
I love when people destroy a theory I have. So I'm going to throw that in the garbage. It'll be deleted from my software, Garrett. So, you know what? Great interview, Garrett. And I'm sure after people have seen this live or the video, they're going to want to know how to follow you and where you are. So it'd be a good time to, we know that your Twitter handle is @GarrettPatton.
Correct.
And at first I thought you used some kind of stage name, and I thought it was Garrett's Patterns. But
I've actually had comment about that before.
Yeah, it could be a new one for you. So what's the best way for people to follow your work and stay in touch and learn from you?
Yeah, definitely. You can follow me on Twitter. We also, on our site, EliteWaveTrader.net, offer a free 15-day trial period for our services with no credit card required. So you're welcome to come check us out there and see if you like what we have to offer.
Thank you so much for what our most valuable currency is time, Garrett. Thank you for spending some of it here with us today. Like it or not, you're now my trading warrior brother. And,
I like it.
And I wish you and everyone who your work touches that pips and dollars rain down on them. And really was a pleasure meeting you. Thank you very much for your time today.
The pleasure was all mine. Thank you very much.
And generous with sharing your outlooks. So again, thank you for planting good seed, and I know you're going to have a great harvest in your career as a trader. I can feel it. All right, buddy. So everyone, that's a wrap for today. Remember, don't just count your pips, count your blessings. Follow Garrett. This guy is very good. And we'll see everyone for Turnaround Tuesday. Enjoy the rest of your session. Adios. And thanks again, Garrett.
Thank you.